All right, so welcome into the live stream today. We're going to jump into Bitcoin, take a look at Ethereum, and also the volatility that could be setting up in the month of March. This could be one of the more important months of the year. We'll break all that down for you guys today. My name is Paul Barron. Welcome back into Tech Path. This is going to be a fun one because we've got, of course, one of our favorite analysts on, stock traders extraordinaire, Mr. Gareth Soloway, coming in from In the Money. Nice to have you back.
Hey, it's great to be back, Paul. Thanks.
Hey, Gareth, let's get into a couple of things. I want to look at a couple of tweets here just to kind of set the stage. You had retail companies this month, Home Depot coming in with assuming that there's going to be no consumer spending. You had Target in a very challenging environment. Walmart, prices are high, pressure is on consumers, and also credit card debt starting to hit. So it's likely that we're going to feel a recession possibly rolling in. Within that, you guys also had a tweet in here, food for thought on the S&P, what's likely a major downside over the next 12. And then you gave kind of a potential chart analysis of that channel that could be dropping into it. When you look at the S&P and a lot of what's happening with consumer spending right now, what do you feel like the S&P's real case scenario could play out through the early summer months right now?
Yeah, I think through the early summer months, my guess is we will retest those October lows. But I think, again, the recession that everyone's talking about will eventually hit. But my guess is likely in the second half. So kind of late summer, fall, maybe into the kind of November, December period. And so I think that the markets are going to be kind of on the kind of the cusp of wondering what's the Fed going to do, right? Because the
Right.
positive of a recession is the Fed stops hiking and maybe cuts, but the negative of a recession is lower earnings for stocks and maybe a troublesome recession that we can't get out of very easily unless the Fed comes to the rescue. So it's going to be one of those guessing games, I think, over the next 3 to 4 months. And then I do think that ultimately it becomes a very bearish scenario for the overall equity markets and really, to be honest, all risk assets.
Yeah, I was looking at this tweet from the Walter Bloomberg. Funny how he put that in there. Goldman Sachs CEO David Solomon says anyone running a business has to be prepared for a bumpy 12 to 18. This came up from CNBC. Are you in agreement with that right now, with kind of the way this is shaping up?
I really am. And again, I think we're seeing more and more signals of this where, you're getting certain data points like jobs to stay strong, but then you have other kind of economic data points that are becoming very, very weak. And I think ultimately the jobs will weaken, but it's keeping the Fed tighter for longer. And that's actually going to be very problematic over the next 12 to 18 months. So I think you're going to get in this very serious pickle for this economy. And I think you're going to see a lot of fear coming in later in the year and into 2024.
Yeah. Interesting. All right, with that being the case, here was just kind of a run at Bitcoin, a little bit of a risk of a deeper pullback toward around the 20K mark. And I mean, I think we've looked at this potential of it being much lower. This kind of comes back into what I think is a bit of a range zone that could happen over the next few months. What are your thoughts when you look at your chart for Bitcoin between now and let's go into end of Q2? So around June, July, as we start to head into the summer.
Yeah, so I do think that we're going to see some downside in Bitcoin here, and we've already seen a little bit of a pullback off the 25,000 marker. But let's take a look at the chart and see what we have in store here. So if we look at the chart of Bitcoin, we can see that the recent highs mirror the high pivot from the August period, right? So it makes a lot of sense why that was going to be a pivot resistance point. And so what we can do is we can basically take a trend line, put it right at that high, and it's the highest point going back to when we made the cycle lows on Bitcoin here, and that's where we stopped out. Now, what we're seeing here is actually a little bit of a channel being developed. And again, channels are really handy for kind of giving us highs and lows. So what we can do is we can connect these lows here, and we drag that trend line up, and then we notice that that matches the highs on Bitcoin as well, from here to right here. So what this tells me is that you have a lot of resistance around 25,000, 25,300, but then your technical support is around 22,300. So my guess is we'll retest 22,300. The big question then becomes, do we break that level? I am in the camp that eventually we do break that level and we trade back to about the 18,400 level, which was the midpoint here of this kind of W pattern bottom. So again, I
Yep.
am in the camp that we will see some trouble for the economy here over the next, the next, at least in Bitcoin and the stock market, the next few months. I do think a retest of the October lows, which then brings Bitcoin back to about 18,400.
All right, so with Bitcoin and Ethereum also kind of tracking to a certain level that is very similar to what happens with Bitcoin. We'll look at the Ethereum chart here in a second. But I want to get your theory on this. We saw new data coming out from Coinbase this week. This was a Coinbase report in terms of people owning risk assets, digital assets, Bitcoin, Ethereum, etc., even NFTs to a certain extent. The one thing that surprised me was the amount of people, especially in the US, the number of investors that have been able to do this, quite significantly higher than this time last year. The other thing that we broke down in our own sentiment data was the demographic shift that has occurred. It seems like the under 40 appears to be shifting away from traditional assets. Do you think that even though we may see a little bit of troubled waters here, that we actually see an investor class start to rise on the digital asset side and create some solidity over there in those markets over the next year?
I do think so. I think that, again, the social media in the world has really brought to the forefront. And that's why you see this under 40 crowd, right? Once you get to the 50s and the 60-year-olds, it's not quite as influenced by social media. But there's so much on social media about the demise of fiat currencies, which rightly so. I mean, when you see what the governments are doing around the globe, but it is really pushing younger investors to say, listen, I don't know about stocks. Is it a rigged game? Where is it not rigged? Well, right now the feeling is that it's more these cryptocurrencies, and the investing class of this new generation is absolutely looking at this as a new place to put money.
All that, I have my own theories about how the SEC is involved with this, protecting the banks, doing all those kind of shenanigans that happens on Wall Street every day. I get that. But if you look at the global perspective, I want to jump to this tweet. Global liquidity projected now to rise in 2023, but recently it's pulled back slightly. But then you have things like China injecting, a $500 billion into money markets. This was back in December, January. And you look at the continuation now. Some people would look and say, well, China's doing that to basically right the ship that they had in terms of the productivity loss during the pandemic. Do you think that is the case, or do you feel like China is trying to run a little bit of a front run on the overall markets as we potentially, and maybe kind of outplay the United States as we come out of a recovery for where China could be on a global scale? What are your thoughts?
Yeah, so I do think China's trying to front run a little bit here, right? I mean, they're very aware that they have a kind of a class of people there that are going to be the next big consuming public, right? And they're already starting to get there. So what they need to do is nurture it. And how do you nurture it? You inject liquidity, you keep things from getting too bad where people run away and get scared. And so I think, not only did you have the pandemic that caused issues there, but then you also have their real estate markets, which are just in shambles as well. So they have to do this injection, not only to kind of save the economy, but also to continue to nurture that growing middle class, which they view, and again, this has been documented, but you have China saying, listen, we want to have an economy like the US where the consumer, our own citizens, are the driving force. We don't want to be reliant on the US. And if we do something that annoys them, they can slap tariffs and all of a sudden it creates problems here. So I really think that that's what's behind this. And they are kind of front running the next move in liquidity. Absolutely.
Yeah, very interesting scenario playing out right now. I think we're going to see some interesting things happen on the global stage, which could, again, start to timing-wise be very, it could be indicative of how the market responds, especially here in the U.S. on when we look at traditional versus what we could see on risk assets. I want to jump over to this article. This was talking about a potential breakout, and the interesting thing he talks about is this 23.8 level right here, indicating that we could have another test of support. And I'm looking at the current chart for today on Bitcoin. We've had, this is I think on the 4 hour, yeah. And you see almost going on 12 hours of runs right now where we're up here almost to that 23. Could we hit that 23.8? There's still a lot left to go. What are your thoughts about whether or not Bitcoin can hit that level of support around 23.8?
Yeah, so I assume you mean resistance, right? So we're looking because
Resistance,
price right
sorry.
now trading at 23
Yes.
thousand 500. So I think that's what we're watching here, right? So you're absolutely correct, is that you're getting this consolidation in the charts, and that does seem to be a pivot point. And the reason it's a pivot point is that if we look at the daily chart, and I can throw my chart up again here to take a look,
Yep.
is we clearly see that this area here, that first kind of little topping area, that's right at 23.8. And so the idea here is that if you can recapture that high, it starts to tip the scales towards the more bullish side. Now, again, if we put that trend line in here, right at 23.8, you can see right now we are just below it, but you could be putting in a little of consolidation that could be setting up for another move to the upside. So this is kind of one of those scenarios where as a trader, I sit back and I watch because I'm not good enough to kind of determine which direction it's going to go, but it will
Hmm.
be interesting. And I agree that if we get back above 23.8 and it can stay there, let's first say for 24 hours, it then increases the probability of us making a move up again and retesting the 25,000 level. Now, if we can't get above 23.8, it goes to the scenario that I just talked about prior, which is where
Right.
you have to start looking at this 22,300 area on the chart.
Yeah. I want to jump over to Ethereum. A lot of news recently. We've continued to see a pretty heavy growth cycle here within the NFT market. Many people, analysts alike, have looked at where the NFT market is, obviously the support mechanism for ETH as a whole, as hitting a bottom. And possibly what we are now seeing is the beginning of a new birth of where market integrations have. You've got a couple of articles out here. This one kind of talks about Ether to set to gain market leadership. A few points they made in there, I think, really was the fact that ETH could continue to explode. We showed a lot of not volatility, but the ability for deflationary mechanisms to really continue to fly on ETH. With all those things playing out in this, and also if you look at staked ETH, also all growing, everything's kind of up and to the right for Ethereum. What does it look like in your chart, at least in the short term, back over into these early months of summer?
Yeah, so at least in the short term, we're kind of stuck in a same kind of parallel channel that we're seeing in the Bitcoin chart. And what I mean by that is if we kind of draw a trend line like this, we can bring this down here as well and notice that we're trending sideways to slightly up. Now, the one thing I think is a positive here in the near term, and this is just talking over the next few days to a week or so, is that we had this strong move up where we tested the high, and now you are consolidating. So there is a chance that we could make another attempt, just like with Bitcoin, at the recent highs. If we do that and we can puncture it, you then have the possibility of going up and retesting that 2,000 level. Now, interestingly enough, the 2,000 level was the highest point on Ethereum since the lows were put in, right? And that's
Right.
going back to basically August of 2022. Interestingly enough, Bitcoin has already tested that high from that point. Now, granted, Ethereum made a much bigger percentage move, but it'd be interesting to see if Ethereum still needs to test that level before there's any chance of a corrective move, since
Mm.
Bitcoin already did do it. So it is something I'm watching. I would be, based on the current chart in the very near term, I would be slightly bullish on Ethereum here just over the next few days.
Interesting that you say that, because that's kind of our position right now on what we're seeing, at least on the sentiment side, is again just the amount of traction that Ethereum is again. And we look at sentiment data. A lot of people kind of measure that in comparison when these markets get a little bit sideways, or when we're starting to see a little bit of kind of deafness to what's happening in the macro side of things really playing out. One thing I noticed here, this was in the article, 30% staking post Shanghai. This would be comparable to another, like an entire proof of stake chain. So if we see that continue, when Shanghai occurs, and that's going to be the real question, is if we see a lot of exit liquidity. I don't think we will. I still think that there's going to be people, sure there will be some, but not to the magnitude that I think a lot of people are talking about. So if that is the case, back to your point, could be a bullish signal going forward.
And I think again with crypto, the key is this, is right. The further away from FTX we get, and
Hmm.
the less there's new FTX scenarios, right, where you scare the market and you worry, people start worrying about, their money and their exchange accounts and so forth. I think the further away we get, the better it is for crypto, right? Now the big headwind is going to be, when are we going to get the judge's decision on Ripple? When are we going to get the regulation on crypto and find out exactly what it is? I mean, that's kind of the dark gray area here in the cryptocurrency markets. But I think investors are gaining, at least the retail crowd is gaining more and more stamina to be back in this market after they really got scared when FTX collapsed.
Yeah, for sure. With that being said, I want to show you this. This is a good one. The Wall Street cheat sheet. You've seen this before. Where do you think we are in this thing? Because we were looking at, kind of just the variations. You can kind of see the euphoria all the way into place. This looks exactly like that high back in 2021. Then we had the massive crush right here. Do you think we're down in this area right here around the anger and depression zone, or what's your thought?
Yeah, I do. I think right around that bounce, the bounce with anger is kind of where I'm leaning towards where we are. That kind of orangish, yellow, orange. Yep,
Yeah.
exactly right there. So I still think it's going to fade, and I'm still in the camp that as of now I haven't seen enough signals to make a call that the lows are in. But again,
Hmm.
when you're trading at 16, 15,000. I don't think there's that much more to go to the downside. I mean, maybe 12 to 13, maybe worst case scenario 9, but for sure we're in that anger area, right? I mean, I think FTX really was one of those scenarios where investors were like, what the heck? This is messed up that people are, basically lying to our face and just taking money and running. So I do think that we're close. I still think it could take another 6 to 12 months for it to bottom out, but I think that again the downside is somewhat limited when you look at the bigger move from 69,000 all the way down to 15.7 or so.
Yeah, for sure. Gareth, Cathie Wood made a couple of statements. This was in a previous interview with Sarah Eisen and Quintella, talking about two factors here. And there was two key points she made, and I don't want to go through the clip there for everyone, but mainly she said that there was a cycle, this has been through in her early career, where we were in this kind of scenario before playing out of low interest rates that would be trending up. Right now, we've obviously corrected, but if we're looking at a potential pivot on the Fed, let's say we do get actually through, because we're further into the cycle right now. So the likelihood of recession coming in. The question is the length of that recession. And if we do see a Fed pivot during that recession, which is most likely going to happen, and you start to see the lower interest rate, that is when her indication is that's if you're betting with that lower interest rates, you're in the right camp of early investing, buying at that bottom, and then tracking that out. Would you agree with that strategy?
I would. I mean, so this is my caveat to that, is that I do worry we're going to get in a recession that's not going to be a normal recession, right? We've just gone through 13 years, arguably, of an expansionary period with massive printing of money, interest rates essentially near 0%. And so to me, there's almost this scenario where we could now be stuck in a longer recessionary period than what we're normally used to. And again, part of that is the fact that if inflation doesn't come down to 2 or sub 2%, the Fed is not going to be able to lower interest rates back down to where they were for the last big boom in 2021. And so again, the question is, even if they drop, let's say they drop interest rates from 5% back to 3.5%, how does this economy continue to function? And I do worry that we get in this scenario where we're stuck for a multi-year recessionary period. And I've actually gone on record in saying that I wouldn't be surprised if the S&P doesn't make new highs for 5 to 10 years at least, maybe even more.
Yeah, we've talked about that here on this show, is that the length of being able to recover to those kinds of recovery spots. But I think it's also a little different because you're looking at an era of investors that, in my opinion, are starting to, I won't say retiring out, but they're in a position where they've kind of gone through their cycles. They're probably not going to go through another major bull run. Their investment classes, but in many cases, they've taken their wins and kind of pulled the game off the table. Now you have this whole new era of under 40 investors that are repositioning how they hit the landscape. That's the question mark to me as to what is going to be the winning scenario that plays into this. Does Wall Street get back in it, or do we see risk assets start to get a little bit more
That's a
active?
great, I mean, that's an amazing question too, because it brings up the possibility that as the older generations maybe don't invest as much because they have to use that money carefully for retirement,
Sure.
the younger generations now are splitting their money in between crypto assets and the stock market, which means there's less money to go to the stock market. So it even lends even more credence to that idea that it could be a long time before the S&P 500 really makes a new all-time high.
Well, and it gets back to the point we always talk about here on the show is that when, risk assets, crypto, digital assets in general detach and become
Right.
the asset class we believe that they probably will be at some point, which is its own world, much like gold has done to a certain extent. Sure, there's variables that do connect, but for the most part, it's detached away from traditional assets. I want to hit you on two stocks before we let you go. I want to hit you on Tesla. Tesla, of course, a lot of activity on Elon and with what's happening. You've got FSD issues. We've got a recall happening, if you want to call it that. You've got Mexico now coming in with a new plant in Monterrey. So lots of things happening. And then we also have an investor day coming up here in early March, which we're probably going to cover. What do you think about Tesla in terms of the stock price right now and where it might go?
So right now, at least per the chart is showing a little bit of an overbought scenario, right? So we've had this monster run. Now it has consolidated, which is a bullish sign, right? So near term, it wouldn't shock me to see a little bit more upside. I think, again, for me, the chart is going to run into a lot of resistance. If we take a trend line and we look at these areas here, and we connect these through, it doesn't really give us a ton of upside, maybe 225 to 230. But look at that trend line right there and how if price pops, that's going to be a major level in the chart. So I think that for the most part, there's a lot of retail money that's come back into this. I've seen so many signals of kind of investors wanting to revisit the kind of the old days, right? The good old days,
Yeah.
if you will, of 2021. And I do worry that's a false flag, meaning that it's
Yeah.
setting up for people to be very, very disappointed. So I do think near term, you could have a little bit more upside here. But for the most part, if I had to choose a side right now, I'd be short Tesla.
Well, I'm in agreement with you. I'm a Tesla bear now, and I've been a Tesla bull for a long time. I've owned many of these cars, but I've also got a chance to experience what I think now is a bit of a shift around consumer sentiment. This whole FSD debacle that's occurring right now. This may not bode well for Tesla in the long run. Of course, we'll see that. The one advantage I think with Tesla, and I'd love to, we probably should bring this back up on another EV show here on TechPath, is that all of the major manufacturers have started to slow the process as well. Ford stopped producing the Lightning. We've started to see GM slow down. So with that case, it's still possible that we could see some sales figures grow for Tesla because I don't think the EV market's going away. But it's a different kind of growth, I think, for Tesla. Last topic is Unity. Go ahead. You were going to say something about Tesla?
No, I was just going to say, and I think with Tesla too, is that, right now they are a car company. Yes, an electric car company. There's been so much talk about them being something else. But when you look at the numbers, their revenue, almost 100% is coming from cars. And so at some point, especially as Ford starts switching over to all EVs and all these other, you have to value it in the same batch until there's some new factor. And again, maybe the investor day will unveil something from Elon Musk. But as of now, to me, longer term, it's well overpriced still.
Yeah, I just feel like my personal, I've owned Tesla for many years and recently exited my position this year, late last year. And I just felt like I was duped because FSD was a big promise. We thought we were going to see autopilot expand into the robotaxi network. We thought now, of course, thought we were going to see the new Model 2, whatever you want to call it, the low-end cost car, never appeared. Obviously, the Cybertruck, sure, we might see that this year if we're lucky. There's just too many promises there, man. Eventually, you got to start coming together on these.
You do, and it's funny because I still remember when he first announced it. I actually put the $100 down that reserved a Cybertruck, and I think that was like 3 years ago now. And it's just like, at some point, hopefully it gets made. But I think it goes to Elon Musk, right? He's a visionary in terms of idea man. He's an idea man, which is what gets investors excited. But the problem is you have to bring the ideas to the public, and it's a little harder, right? I mean, you can have a great idea, but then working out the logistics of it in the real world is a little bit trickier, and we see that with FSD for sure.
Yeah. Back to Web 3.0, Unity now is hooked up with a variety of different projects, Altura, Solana, MetaMask. There's quite a bit happening around Unity. Unity software, well known for indie gaming. And we're going to cover this topic for you guys, just so you guys are aware. We'll be on Metaverse Insider today talking about this. But where do you think Unity as a stock could go? Because this seems to be really a good, in my opinion, a bit lower in terms of value right now. Might be an opportunity. What are your thoughts?
Yeah, it's an interesting one, right? So if we take a look at the chart here and we go back, so number one, at one point, this stock was at $210 a share. That was back in November of 2021. So, I mean, it had a monstrous fall. And what we've seen is that it's now gotten into this kind of sideways chop for the last really, almost the last year. The stock recently reported earnings. It fell sharply. It's been consolidating off of that. The first thing that pops up on the chart to me is a trend line where if we connect this low to this low, you're now kind of right into support. So the question is, can this line hold? If it holds, then you have some nice upside. If this breaks, you start probably retesting the downside here down into the low 20s. But you certainly are at support. You can see the price today is moving up a little bit. I think, again, it's all about time horizon, right? So if you're a believer in what they're working on, then at these levels, it probably makes sense to give it a shot with some money that maybe you don't need for a couple years. If you're somewhat of a shorter term trader, you could buy it for a quick bounce, but it's probably not something you want to stick around with until you get more clarity on what's going on with the company.
Yeah, for sure. Well, we're going to get a chance to see all of that today. We're going to be doing a full deep dive on what is happening with Unity. And always great to have you on. Gareth, thanks again for stopping in today. We appreciate it.
Paul, thank you as always for having me. It's always a pleasure to talk.
You bet. All right, so you guys, if you're not part of the Diamond Circle, make sure and jump in. You get a chance to see a lot more content. We do our podcast over there, amongst other things that we do in terms of even CPI analysis, which is now over on the Diamond Circle. Visit that. It's very simple. Just go to the pbn3.substack. You'll find us over there. Let me go over to the poll real quick. And what will happen first? Bitcoin to 25 or 21? Man, the audience is split on this one at 21K, leading out. So people are still a little bit more bearish today in the charts for sure. Interesting. Well, I mean, I think this is the thing that is playing out, and we will see a lot of this, I think, in the future. The key here that Gareth was talking about is the downside still looming on what the macro pressures could be from not only what the Fed construct is and how they're going to be dealing with a potential issue of a recession, but also how does that recover out. So we're going to be watching this. I still believe, though, I did a podcast on this over on Diamond Circle, so check it out. It's a thesis around this investment demographic shift that is underway. So it's an interesting one, and we kind of talked about it today, but we go in a lot deeper on that. Of course, if you guys want to reach me, it's very simple. You can go out there on Twitter, hit me up. It's @Paul Barron. We'll catch you next time right here on TechPath.